Hey there, what's up, and welcome to the How to Adult Show. I'm your host, Corey, and in today's episode, I'm going to tell you all about the most dangerous button in your online banking window. Okay. All theatrics aside, though, there legitimately is one button in your online banking that you never want to use. And that's the Pay Minimum Balance button that you see when you go to pay your credit card. Now, if you're sitting here and scratching your head saying, what the heck is she talking about? Or maybe even, man, I freaking love that button, then you're definitely going to want to stick around for today's episode. Before we jump in though, I just want to make sure that you've gone ahead and clicked the subscribe button to the show. And if you're watching us on YouTube, then please also make sure that you click that notification bell to turn it on and hit the like button below the video until it turns blue. It's great feedback for me, and it's also super helpful to keeping this show going and getting this information out to other people. Have you done it? Have you hit subscribe yet? Awesome, you're the best. Let's get started. Before we dive in though, I want to say a quick hello and welcome to the How to Adult Show. I'm your host, Corey Fowler, and this is your source for all the important adulting life skills, like personal finance, that you wish someone had just taught you in school. So make sure you hit subscribe and let's get started. So diving into today's episode, what is the Pay Minimum Balance button and why am I recording an entire episode all about why it's such a dangerous button and why you should never use it? To start with, I'm just going to make sure that we're all on the same page here though, and make sure that you know exactly what button I'm even talking about. If you have a credit card, and if you've ever paid off that credit card, which hopefully you have, and paid it off through your online banking, then you'll know that when you hit the buttons to go pay off your card in your online banking window, you have three payment options. And these options are Pay Last Statement Balance, which means you're paying your last statement in full. Other Amount, which means you get to choose how much of your last statement you pay, and Minimum Payment, which is usually a really tiny amount of money that the credit card company offers for you to pay instead of paying for the full balance altogether at once. So, for example, let's say you have a $2,000 credit card bill. You might see a minimum payment option of just $10 for that month instead of having to pay the full amount of $2,000 that you actually have owing on your most recent statement. So unless you are up the proverbial creek without a paddle and you absolutely cannot pay your credit card bill in full, this third option, the minimum payment option, is one that you should never, ever use. Let me say that again for the people in the back. You should never allow yourself to use the minimum payment option on your credit card. Realistically speaking, you probably shouldn't use the Other Amount option either. So really, when you're paying your credit card, the only button that you should ever be selecting, like ever, is the Pay Last Statement Balance option. But that didn't make as catchy a title for this episode, so you know. Anyways, I know that it's tempting to only pay your minimum, especially when you're staring a huge credit card bill in the face. And I understand that in the moment, it seems so nice of the credit card company just to offer for you to pay like a little bit of what you owe. And I know also that you can promise yourself that you'll save more money next month and pay the whole thing off at once later. But none of this is true. Let's be honest, the chances of you saving more next month are slim, and it is absolutely not the credit card company being nice and offering for you to pay just a little bit of your balance so that you can transfer the remainder of your balance onto the next month's statement. Now, if you have been doing this, don't freak out and don't feel bad about it. Chances are no one ever sat you down and taught you how a credit card works. Actually, if anything, you've probably had the opposite experience. You probably just received a pre-approved credit card in the mail one day, maybe when you were even a teenager still living at home, and you didn't read the fine print because nobody reads the fine print. And even if you were the kind of unicorn person who does read the fine print, it probably wasn't even entirely comprehensible. So again, if you have been using the minimum balance button, don't feel bad about it. No one is born understanding how a credit card works. But now is the time to commit to not using that button anymore, okay? And making the change to paying your balance in full every single month. So First thing is we need to understand how credit cards work. And the absolute first thing you need to understand is that your credit card is a business. And the goal of that business is to make money, period. That's what businesses do. Okay, so while your credit card does provide a flow of money for you to access, the ultimate goal of that credit card is for it to generate more money for the business. And credit card companies make money in two ways. First, they charge a small fee to the vendor you make a purchase from. You don't need to know that. And second, your credit card will charge you interest if you make a late or partial payments, which is something that a lot of people do. And credit card companies make it really easy for you to do this because they make a lot of money off of it. When you use your credit card, you're borrowing money from the credit card company. And then it's up to you to make sure that you pay all that money back to them on time. When you miss a payment, make a late payment, or only pay part of your balance and then carry the rest of it forward, the credit card is going to charge you interest on that. And credit card interest rates are really, really high, like insanely high. Credit card interest rates are the most behemoth, massive interest rates that you will ever encounter in Canada, that you'll ever encounter. Where I am in Canada, most credit cards will have an interest rate that ranges from starting at about 20% up to as much as 30%, which is crazy stupid high. And this is how credit card companies make money. You borrow money for them, and then they so nicely give you the option to only pay part of that money back by the due date, which feels good to you because at the time it feels like there's more money left in your bank account or your pocket, at least by appearances. And then once you take that option, they charge you huge amounts of interest for the privilege of borrowing that money from them for longer. And this is why they give you the minimum payment option. Most of the time, it's actually more beneficial for the credit card companies, if you use this option than it is for you to only pay the minimum amount of your existing balance. So what happens when you pay the minimum amount? Let's say you owe $1,000 on your credit card. If you choose to pay the minimum payment, chances are you'll have the option to pay something like $10. This means you pay $10 of the bill you owe, but there's still $990 remaining that you've still borrowed from the credit card company and that you still owe them. This $990 is now carried forward to the next month. And as soon as the original statement due date passes, you start paying somewhere between 20 to 30% interest on that $990. Now, the way that this compounds can be a bit complicated. It varies per credit card oftentimes, but the important thing to understand is that carrying this debt forward at this high of an interest rate is going to cost you a lot of money. So what happens, and this is where people get themselves into trouble and create huge holes of consumer debt, what happens is that you carry forward that $990 to the next month, and then you're paying interest on that amount. Then you spend another $1,000 this month with your credit card, so now you owe $1,000 from this month, as well as the $990 of money that you borrowed last month, plus the interest that you've been paying from the previous month. If you do this again, which chances are if you've done it, then you probably will because they're going to offer you that minimum payment option again. What happens is now you're carrying over an even larger amount of debt and you're paying huge interest rates on that higher debt. And this is the key part, as well as starting to pay interest on the interest that you've already accumulated. And unfortunately, this is how people rack up massive, massive credit card bills without even realizing it. And more importantly, this is why it's so hard to get out of consumer credit card debt. This is why you always hear horror stories about it, because you don't just have to pay back the money that you spent, the money that you've borrowed. Because you've borrowed it, you also have to pay all of the interest that's accumulated over that period of time back to the credit card company as a thank you for letting me borrow money from you. The good news, it is really easy to avoid falling into this trap of creating a growing monster of consumer debt for yourself. All you have to do is make sure that you're paying off your credit card balance in full in full at the end of every month or whenever your statement balance is due. Now, I know that this is something that you struggle with. You're probably sitting there going, yeah, that's a lot easier said than done. And I hear you. So here are a few quick and easy to implement tips that will help keep you on the straight and narrow of using your credit card responsibly. Tip number 1, never spend more on your credit card than you have available in liquid cash in your bank account to pay it off with right away. Know how much you have in your spending account, know how much you're spending on your credit card, and never spend more on your credit card than exists in your bank account. I promise that by following this one simple rule, this is all that you need to keep you out of a whole ton of financial trouble for the entire rest of your life. This means that you don't ever use your credit card to finance any large purchases that you plan to pay off over time. For example, trips or furniture for your new condo. Your credit card should not be used to finance your life. That's not what it's there for. The second tip is don't use your credit card as an emergency fund. You should never have a large and unexpected expense that you have to put on your credit card. This is what an emergency fund is for. And if you don't have an emergency savings account yet, I need you to go and tune into episode 6 and episode 16 to learn about how to create one for yourself. Okay? So this is going to help you never spend more on your credit card than you should be doing. Credit card use tip number 3 is to create a system that's going to help you remember to pay your credit card balance off by the due date. Don't ever let yourself just miss a credit card payment because you're too distracted or lazy to just check this statement, or you just let yourself forget. Speaking from experience here, it is really annoying to pay that sucker off again if you just accidentally miss a payment because of the way the interest compounds. It gets really tricky to actually pay it off so that you're not paying interest. So use your calendar, set a date for yourself that lines up with when your credit card statements come available and when they're due, and put it in your calendar that this is your date to pay off your credit card. Ideally, this should line up with when you check your overall finances for the month, pro tip, but even if you just start by making sure your credit card is fully paid off, then you're doing well, and that's a really good start. Credit card use tip number 4 is to never, and I mean never, ever, use the cash advance allowance on your credit card. More often than not, this charges an even higher and even more massive and more exorbitant interest rate, and there's often a service fee that you'll get charged for using that. Even worse, the grace period that you have to pay back your card often doesn't apply to cash advances, meaning you'll likely start paying interest on that money much sooner, if not right away with a lot of cards. So essentially, there's almost no scenario in which you should be using the cash advance option on your credit card. So you want to make sure that you never charge more to your credit card than you have in your bank account to pay it off. You need to set a reminder so that you never accidentally miss a payment, and you need to use your card to make purchases only. Never, ever use it for cash advances. And if you follow these 3 rules, then you shouldn't ever find yourself paying interest on your credit card, which is going to save you a butt ton of money in the long run. So if this lesson was valuable to you, make sure that you hit the like button, make it turn blue. And if you have anything to add or further questions, make sure you use the comment section down below on the YouTube channel to chat back and forth with me. I love hearing from you. And finally, in case you haven't yet, although I'm sure you have because you're awesome, make sure that you hit subscribe to the show, and that'll make sure that I get to see you right back here next Monday with a brand new episode of the How to Adult Show.